The invisible fence. 1. The opening hook, the expire date. Imagine waking up on a Tuesday morning. You go to the grocery store to buy a steak for dinner. You tap your phone at the terminal, but the transaction is declined. Not because you don't have the money, your balance is plenty, but because you've already reached your carbon limit for the month. You try to buy a bottle of wine instead. Declined. Your health insurance data was synced to your digital wallet this morning, and your wellness score is too low for alcohol purchases this week. Finally, you realize the $500 you've been saving for an emergency just vanished. Why? Because that specific batch of digital tokens had an expiration date. You didn't spend it fast, enough to stimulate the economy, so the central bank simply deleted it. This isn't a dystopian novel. It is the technical reality of programmable money. While the world was arguing over crypto and inflation, the architecture for a global digital prison was being built right under our feet. They call it CBDC, central bank digital currency. But to the architects in Basel and DC, it is something else entirely. It is the final end of human autonomy. The death of anonymity. For thousands of years, physical money, gold, silver, and even paper cash had one superpower: anonymity. When you hand a silver coin to a merchant, the transaction is private. There is no middleman. There is no ledger recording your location, your diet, or your political leanings. Physical metal is the ultimate off-grid financial tool. But a CBDC is not money. It is a ledger-based surveillance tool. Unlike the digital dollars in your banking app today, which are private liabilities of a commercial bank, a CBDC is a direct claim on the central bank. This means the government doesn't just see your transaction after it happens. They authorize it before it occurs. Every cent becomes a data point. Every purchase becomes a permission. In the CBDC era, the invisible fence isn't built of wood or wire. It's built of code. Programmability, the silent killer. The most dangerous word in finance today is programmability. The elites at the IMF and the World Economic Forum describe it as a feature to help the unbanked. In reality, it is a remote control for your life. Image, a digital wallet interface showing restrictions like gas, blocked, meat, 20% remaining, savings, expiring in 4 days. If money is programmable, it can be restricted in real time. Geographic fencing. Your money only works within a 5-mile radius of your home to reduce your carbon footprint. Social credit integration. You posted something harmful on social media. Your digital wallet is restricted to essential items only for 48 hours. Negative interest rates. The government wants you to spend. They program your money to lose 1% of its value every week. It stays in your account. This turns money from a store of value into a tool of obedience. The moment the world moves to 100% CBDCs, the concept of savings dies, and the concept of compliance takes its place. The war on cash and the silver threat. Why are they in such a hurry to kill cash? And why are they so terrified of you owning physical silver? Because you cannot program a silver bar. You cannot expire an ounce of metal. You cannot geo-fence a transaction made in physical bullion. Silver represents the ultimate exit ramp from the CBDC trap. It is the only high-value industrial asset that is small enough to be used as a medium of exchange, but significant enough to store real wealth. The architects of the Great Reset know that as long as the public has access to physical silver and gold, the CBDC prison has a back door. This is why we are seeing a coordinated global attack on physical metal ownership. From high taxes on bullion to know your customer laws for the smallest coin purchases, they are trying to board up the windows before they lock the door. The global rollout. This isn't a future threat. It is happening now. China's eCNY is already live, testing expiration dates and social credit links. The European Central Bank is in the preparation phase for the digital euro. The Federal Reserve has already launched FedNow, with a high-speed rail system that the US CBDC will run on. They are waiting for a crisis, a banking collapse or a cyber attack to tell you that cash is dangerous and the old system is broken. They will offer you a CBDC as the safe government-backed solution. It will look convenient. It will look modern. But it is the ultimate Trojan horse. The fence is being built, the gate is open, and the bait is convenience. But what happens? When the fence is closed, what does a society look like when the government can turn off your ability to eat with a single keystroke? In part 2, we are going to look at the social credit blueprint. I will show you how China's digital yuan is being exported to the West, and the terrifying evidence that your banking data is already being used to build a financial health score that will determine your future freedom. The social credit blueprint, the export of surveillance, the digital yuan, eCNY model, and financial health scores. The laboratory in the East. While Western economists debate the technical efficiencies of digital money, 1 billion people are already living in the prototype. China's digital yuan, ECNY, is not just a currency, it is the most advanced social engineering tool ever devised. The People's Bank of China didn't build it to make payments faster. Alipay and WeChat Pay already did that. They built it to solve the problem of anonymity. In the ECNY ecosystem, the government is the central node. They don't just see that you spent money, they see why, where, and with whom. It is a system where financial inclusion is the bait, and total visibility is the hook. The financial health score, coming to the West. You might think this is strictly a Chinese phenomenon. You would be wrong. In the West, the terminology is softer. We don't call it social credit. We call it financial health scores or ESG compliance. Major Western banks like NatWest and standard-setting bodies are already shifting their focus toward monitoring your financial well-being through real-time data. Under a CBDC framework, these scores become automated. Your ability to get a mortgage or car loan or even a basic credit line will no longer be based solely on your income. It will be based on your behavioral risk. If you donate to an unapproved political cause or buy too much of a restricted commodity, your CBDC wallet could automatically adjust your interest rates or disable your borrowing power entirely, the end of the third-party doctrine. For decades, your privacy was protected by a legal buffer, the commercial bank. If the government wanted your records, they had to go through a process. CBDCs destroy this buffer. When you hold a CBDC, you're banking directly with the state. The Federal Reserve or the ECB becomes your teller, your auditor, and your judge. This is the end of the third-party doctrine. There is no longer a private middleman to protect your data. Every transaction is a direct conversation with the central bank, and they are recording every word. The programmable lockdown. The real danger is not just that they can see what you do, it's that they can prevent it. The social credit blueprint allows for smart contracts to be embedded into your money. I've already seen the blueprint in China. Digital red envelopes that expire if not spent by a certain date to force economic velocity. In the West, this could manifest as targeted stimulus that can only be spent on green energy or healthy food. If you try to spend it on disinformation or unvetted resources, the transaction simply fails. Your money is no longer your property. It is a temporary license to consume, granted to you by the state based on your social standing. The silver silent rebellion. Why do the architects of this system fear silver? Because silver is analog money in a digital world. Image: a hand holding a physical silver coin next to a glowing digital smartphone screen. You cannot program a silver coin to expire. You cannot track a silver bar's location via GPS. You cannot debank someone who holds their wealth in physical metal. Silver is the ultimate silent rebellion against the social credit blueprint. It allows for peer-to-peer trade without a central node watching. While they build the digital walls of the CBDC prison, every ounce of silver you hold is a brick you've removed from that wall. The blueprint is ready. The infrastructure is being tested. The social credit system is being rebranded as financial health to make it palatable for the Western mind. But how do they get the world to agree to this? How do they move billions of people from the freedom of cash to the cage of the CBDC? In part 3, we look at the crisis catalyst. I will show you why the coming banking collapse is not an accident. It is the necessary chaos required to reset the world and force you into the digital ledger. The crisis catalyst. Managed chaos, the death of commercial banking, and the safety bait, the necessity of chaos. History teaches us that people never surrender their freedom in times of peace and prosperity. They surrender it during a crisis. To move the world from the relative autonomy of cash to the total surveillance of a CBDC, the current system must first be made to appear broken beyond repair. We are not watching a series of random economic accidents. We are watching a managed demolition. The high interest rates, the liquidity crunches, and the failing regional banks are the crisis catalyst designed to make you beg for a government solution. In the words of the elites, never let a good crisis go to waste. The chaos is the bridge to the digital cage. The bank run 2.0, the digital stampede. In the old days, a bank run happened at the front door. Today, it happens at the speed of light on a smartphone. We saw the prototype with Silicon Valley Bank, $42 billion withdrawn in a single day. When the next major wave of bank failures hits, it won't just be one or two institutions. It will be a systemic contagion. As people realize their deposits are just unsecured loans to a failing bank, they will scramble for safety. But the government will tell you there is no more physical cash to give out. They will offer you a central bank digital account as the only way to save your life savings. They will present the CBDC not as a trap, but as a life raft, the end of the commercial bank. A CBDC doesn't just replace cash. It eventually replaces the commercial bank itself. Why would you keep your money in a risky local bank when you can have a direct account with the Federal Reserve? This is the great consolidation. By design, the CBDC drains the lifeblood out of the private banking sector, leaving only the central bank as the sole provider of credit and liquidity. This gives the state absolute power over who gets a loan, who can start a business, and who is allowed to participate in the economy. The diversity of the private market is replaced by the monolith of the state ledger, the safety bait. The marketing for the CBDC will be built on the word safety. They will tell you it's safe from bank failures, safe from theft, and safe from unregulated crypto volatility. They might even offer a universal basic income or a one-time stimulus deposit to everyone who downloads the CBDC wallet. It is the oldest trick in the book, trading liberty for temporary security. But once you accept the digital token, you accept the programmability that comes with it. You are safe from the bank's failure, but you are now entirely vulnerable to the government's whim. You have traded a risky financial partner for an absolute financial master. Silver, the unreachable. This is why the movement of physical silver into private hands is so critical right now. In a crisis catalyst scenario, the government may freeze all digital transactions to stabilize the market. During that freeze, the only thing that will maintain its value and tradability is physical metal. Silver is the only asset that the crisis catalyst cannot destroy. It cannot be paused by a central bank. It cannot be rebooted by a software update. While the digital world is held hostage by the new ledger, the physical holder remains sovereign. The crisis is the catalyst and the bait is safety. But what happens once everyone is inside the system? What does the final lockdown look like when cash is illegal and every transaction is monitored? In part 4, we look at the final lockdown. I will show you the laws already being drafted to criminalize off-grid transactions and the technology being developed to ensure that every ounce of wealth you have is permanently tied to your digital identity. The final lockdown. The abolition of cash, digital identity, and the legalization of financial tyranny, the silent gates. In the previous parts, we spoke about the invisible fence. In part 4, those gates are slammed shut. The final lockdown is the point where the use of physical cash is not just discouraged, it is criminalized or rendered impossible by the force majeure scams we've seen in other markets. Imagine a world where legal tender laws are rewritten overnight. Shops are told that accepting physical coins or notes is a public health risk or a security threat. Slowly, the places where you can spend your off-grid wealth vanish. You're left with a choice: enter the CBDC ledger or be excluded from society entirely. The digital identity bind. A CBDC cannot function in a vacuum. It requires a digital identity, DID. This is the ultimate bind. Your wallet is no longer just a place for money. It is linked to your biometrics, your health records, and your financial health score. This creates a liquidity black hole for your personal freedom. If you do not maintain a compliant digital identity, your wallet is simply deactivated. You're not just broke, you are deleted. This is the digital mirage taken to its darkest conclusion, where your very existence in the economy is a digital permission that can be revoked at any time. The end of the exit ramp. As the CBDC system is finalized, the algorithm war shifts its target. The goal is no longer just to suppress the price of silver, but to make it impossible for you to buy it. We see the legal kill switch being applied to bullion dealers. Laws are passed requiring every gram of silver to be registered to a digital identity at the point of sale. The opaque vaults of the East become the only place where true physical silver is respected, while the West is trapped in a liquidity window that only allows for digital paper promises, criminalizing the analog. The final stage of the lockdown is the criminalization of analog trade. Using silver to buy a bag of grain or a tank of fuel becomes an act of economic subversion. Why? Because it bypasses the central bank's ledger. This is where the inventory lie is finally exposed. The elites don't want you to have silver not because it's useless, but because it is the only thing they cannot control with an algorithm. They will tell you that physical metal is for criminals, while they continue to drain the COMEX registered vaults for their own Tier 1 stability. The psychological surrender. The lockdown isn't just about laws, it's about exhaustion. They want you to get tired of fighting the system. They want you to think that silver is a dog because the paper price is manipulated while the digital world seems so convenient. But remember the great decoupling. The moment the digital cage is locked is the exact moment the physical metal becomes unobtainium. The lockdown is the final attempt to get you to surrender your real metal for ghost supply before the paper price vanishes to zero. The gates are closed, the identity is bound, the exit is blocked. But even in a final lockdown, there is a way to survive. if you understand the survival plan of the elite themselves. In Part 5, the final chapter of this series, we look at the parallel economy. I will show you how to build your own hard asset fortress, how to trade outside the digital cage, and exactly how the great decoupling will finally set the physical holders free while the digital prisoners lose everything. The parallel economy. Non-digital trade, barter sovereignty, and the Silver Shield strategy. The two worlds. As the CBDC trap closes, the world will split into two distinct realities. The first is the systemic world, a world of convenience where your phone is your wallet, your ID, and your leash. In this world, you are a tenant of the state, renting the right to exist from a central ledger. The second is the parallel economy, a world of sovereignty, where value is exchanged peer-to-peer, without a central node, without an expiration date, and without a carbon score. This economy doesn't run on code. It runs on metal. It runs on the weight of an ounce and the purity of a coin. This is where the silver escape becomes a reality. Barter sovereignty, the silver standard 2.0. In a world where every digital cent is tracked, the most revolutionary act you can perform is a private transaction. Silver is the perfect tool for the parallel economy. While gold is the central bank of you, meant for storing large-scale wealth, silver is the currency of the people. It is small enough to buy it, groceries, fuel, and medicine. In the parallel economy, we return to value for value. You aren't trading a token that can be deleted. You are trading an industrial asset that is essential to the 5G towers and solar panels of the very system that is trying to lock you out. The irony is poetic. The system requires silver to build its digital cage, but that same silver is the only thing that can break you out of it. The storage of sovereignty. To survive the CBDC transition, your storage strategy must change. In the old world, digital silver or bank-stored silver was enough. In the CBDC world, if you don't hold it, you don't own it. The final lockdown will target unallocated accounts first. If your silver is just a number on a screen, the central bank will treat it as a digital asset subject to the same programmability as the CBDC. To enter the parallel economy, your metal must be physical, allocated, and segregated. It must be in a location where the digital kill switch cannot reach it. Whether it's a private vault or a secure home location, your silver must be ready to move at the speed of trade, not the speed of an app, building the local network. The parallel economy is not a solo mission. It is a community effort. As the CBDC rollout accelerates, we will see the rise of hard money circles, local networks of farmers, mechanics, doctors, and tradespeople who recognize that the government's digital token is a liability. They will begin to accept silver and gold directly. This isn't prepping for an apocalypse, it's ensuring for a reset. By establishing these networks, now you are building a financial lifeboat that can operate even when the digital mirage of the official economy is frozen or restricted. You are creating a market where the price isn't set by a computer in New York, but by the physical need of the community. The great decoupling, freedom reclaimed. The end game of the CBDC trap is a moment of decoupling. There will come a day when the digital price of silver on your screen says one thing, but the amount of food a silver coin can buy in the real world says another. This is the moment the ghost supply vanishes. The digital prisoners will be left with tokens that lose value daily, while the physical holders will possess the only hard asset that the digital world needs to survive. The trap was meant to consolidate wealth into the hands of the elite, but for the silver holder, it becomes the greatest wealth transfer in human history. You aren't just surviving the reset, you are leading it. The fence is built, the blueprint is live, the crisis is coming, and the lockdown is the goal. You have seen the boring currency behind the headlines. You know that CBDCs are not about money, but about control. And you know that silver is not just a metal, but a weapon of autonomy. The gates are closing. One side offers the safety of the cage. The other offers the responsibility of the free. The choice is yours. Will you be a data point in their ledger or a sovereign in the parallel economy? Thank you for watching this journey into the CBDC trap. Prepare now, stay physical, and we will see you on the other side of the reset.